Welcome to the MarketEdge Tech Talk with Will Paule and special guest David Blake. We're going to review the market conditions of the past week as well as longer-term trends from a technical perspective, take a closer look at the major indices, and to wrap it up, dig into a handful of individual stocks and ETFs requested by subscribers. If you have questions or want to submit a stock for next week's webinar, email us at support@marketedge.com.
Hello and welcome to the Tech Talk for Tuesday, November 29th, 2022. I'm your host, Will Paule, and I'm here with my co-host, David Blake. How are you doing today, David?
I'm doing good, Will. Thanks for asking.
All right, let's start off with a look at what the market's been doing this past week with a look at the market letter.
All right, we had a little positive week last week. It's a shortened week from the Thanksgiving holiday. We started out a little bit rough, and then we finished at a pretty good pace. We got some mixed signals from Fed officials on the rate hikes, and then of course we ended up getting some more COVID lockdowns in China, and that kept investors a little bit defensive to start the week, and then they kind of regrouped, and we actually got the Dow after a couple of days up to a 7-month high. That was the highest it's hit since April. So things are starting looking good. I think we're on pace now for a second straight month of gains for the major averages. I think we end up. Last trading day is tomorrow, so it looks, unless something happens the last hour, we should be on pace for another monthly advance. So anyway, on Monday we had we had that fall, and then we came in on Tuesday and we got some pretty good numbers from a lot of the box retailers. We had Best Buy, Burlington Stores, Dick's Sporting Goods, American Eagle, Abercrombie and Fitch. They all came out, and I think they jumped about double-digit gains from better than expected earnings. NASDAQ kind of led the rally. Also, that just happened to have been the one-year high from last year when NASDAQ made its all-time record high. So that was good. Investors were in a pretty good mood. We came out on Wednesday, another light volume day, and Friday half a day, and it just kind of nudged higher. We did have yields nudge lower. We had when on, I think it was on Wednesday, the November FOMC meeting minutes came out, and the thing that kind of caught everybody a little bit by surprise is one of the remarks was that a substantial majority of the Fed members supported a slower pace of rate hikes going forward. The yields kind of nudged back on that. The 10-year Treasury closed at 3.7% on Friday. That's down from 4.21 on 11.7. So just it's almost a half a point drop on yields here. It's just over in a couple of weeks. You don't see that very often. So that's something to take notice of. You also had the 2-year yield fall below 4.5%. A lot of these market moves when the 2 years gone above 4.5. We see some pullback in equities, and when the 10-year Treasury gets above 4%, we also see a little bit of a pullback. Now, it's interesting today. We've talked in the past. It's normally the 3-month and 10-year inversion that forewarns of a recession. But some people also look at the 2-year and 10-year recession inversion. And as of today, the last time that those two marks were this inverted was in 1980. So we're really getting quite a spread in here, as it looks like we're getting certain people already calling for a recession in 2023, and then yet the Federal Reserve keeps talking up rates. So it's kind of a strange time here that the bond market is telling you that you're already getting too high and that you're going to have to start cutting back here pretty soon. But the equity market is still kind of moving up as the Fed keeps talking up rates. It also had some volatile trading in oil last week. There were on again, off again reports of OPEC increasing production. That sent crude down to about 75 a barrel. In fact, yesterday we'll talk about this later, on the COVID restrictions in China, you actually had crude oil prices hit a low for the year, I think. So it's down here got down to around 75 and change, I think. So we'll see how that goes. But anyway, on Friday, I think the major averages finished mixed. The gains were led by materials, utilities, financial, consumer staples, industrials. And as I said earlier, the weekend the major average is positive, and that's we had the Dow Jones was the first index. Now it's traded above the August high, which is healthy for the market. We want to see that now. We've broken that string of lower highs and lower lows. This is the first index that we've seen start to make a higher high, which breaks that bearish pattern. The technical condition improved a little bit last week. We did have the S&P 500 was closing back above 4,000 for a couple times. That was the first that's happened since September, so that was good to see. We saw the technical indicators finish the week positive. MACD short-term trend gauge was positive. Momentum was also bullish. However, one point to notice was that the Dow Jones. I'm sorry. What we did see was we saw the S&P 500 finish Friday just below a key moving average resistance. It's just below the 100-day moving average. It gets up there close and is backed off. Well, the NASDAQ is just it's 200 on the S&P 500. The NASDAQ got up to its 100-day moving average or got close to it, and it's stalled again. It's done several times that we need to watch going forward here. If we can get above those key moving average levels, we probably will see a short cover rally, which could send the indexes up to their August high. So we want to kind of keep a watch on that. We also saw the VIX move down in the low 20s. That means that traders aren't really looking for a big pullback in here. Although the last time it reached the low 20s was in 19-something, was in August when we hit the August highs. But of course, the difference there was that's when I think Powell came out and said we're going to raise rates, 0.75 of a point, probably the next couple of meetings. That kind of caught the market off guard. Now we also had decent underlying breadth. NYSE and NASDAQ advanced decline lines moved higher. That shows most stocks are under accumulation. And then for the NYSE, that was the second week in a row that we've actually had the new highs outnumber the new lows. That's a little bit of progress. The NASDAQ has still been more than a year since we've had more new highs in a week than new lows. So although we're getting close, we've had a couple of days here where we were very close, almost even in the NASDAQ. Also, investor sentiment last week finished kind of mixed. The percentage of bullish investment advisors was more than the percentage of bearish investment advisors for a second week. So the professionals are getting a little bit more bullish, but the retail investor actually took a step back last week. They dropped back from 33.5% bullish down to 28.9%, and that's below the historical average of about 37.5% bullishness on that survey. So we'll see if see what happens this week. We really didn't have any institutional players come out with a number last week. We'll get that to see if they were just a little bit above 50% invested in equities here about a week and a half ago. So we'll see if that picks up. As far as what's hot, what's not, strongest industry groups were oil field equipment. We're having metals, non-ferrous. We also have precious metals and retailers, apparel. And the weakest industry groups were internet software, auto manufacturing. A lot of that is Tesla. It's down about 60% or 40% in the last 2 months, and then advertising and transportation equipment. So after the holiday, we came in yesterday, and it was a rough start to the week, mainly because the market doesn't really know how to react to the demonstrations in China. They had a fire, I guess, in an apartment, and because of the lockdowns, the fire department couldn't get there, and some people died in a apartment building. So you usually don't have this big of protest in China. And I think a lot of market participants are kind of watching to see how the Communist Party is going to react to that. Are they going to come in here and do what Iran's doing and just start shutting everything down and locking everybody up? That would rattle global markets a little bit, or are they going to step back a little bit and allow maybe they'll have a little softer approach to COVID. You're getting it's kind of night and day. Yesterday you had our market fall 1.5% with the different indexes. You had oil prices roll over. Every sector was lower. Pardon me? Okay. Every sector was lower. And then you also, of course, also adding to that was you had a couple Fed presidents that keep coming out of the woodwork and talking about they're going to keep raising rates and they need to stay aggressive and we're going to keep rates elevated through 23 and into 24. And that's causing a little bit of a problem for the market also. But the interest rates aren't really reacting to that, which is good. So we'll have to see, how that goes. Now today, again, it's you're seeing Chinese stocks actually trade up, and again, it's kind of due to the fact that the Communist Party hasn't come out and started rounding up people that they're thinking, okay, well maybe they're going to go ahead and ease off some of the restrictions, and that also pushed oil a little bit higher today, and we'll see how that goes. If they do ease the restrictions, it's going to be good for global markets as we'll start to see, more production coming up. Their economy will expand, and that'll help the U.S. economy expand also. Now, today, as we're getting ready to start on this thing, it's just a little bit after 2:00, and Fed Chair Powell is giving a speech here as we speak. And again, people that could rattle the market going into the close today. We'll see how what he has to say and see if he stays on the track that we're probably looking at a half point hike in December and maybe a little something in January, and maybe they'll be starting to talk then about maybe at least pausing a little bit or just bumping them up a quarter point. So we'll see how that goes. I mentioned in last night's daily letter that with last night's sell-off, you want to keep an eye on the S&P 500 around that 39.10, 39.20 mark. I think we got down today around 39.40, something like that. Let's see here. Yeah, we got down to 39.40 on the S&P 500 today. Bounced off of that and came up. We want that those areas represent the 100-day moving average on the S&P 500, and then on the NASDAQ 10.9 would represent the 50-day moving average. We like to see, and traders, what they'll do is they'll take a look at those levels to see if it's going to break or bounce. We bounce off that level, they'll come back in, and we could rally the troops a little bit into the year's end. If for some reason something happens here, we start seeing rates move up higher, or we get more restrictive stuff out of China, you might that could be a problem. That could put a damper on a year-end rally. But I think if you have a positive attitude, I think we might see some a little bit of back and forth trading here this week, and maybe we can see if we can rally the troops here going into the end of the year.
All right. So one of the features on the MarketEdge site is doc stocks, where we analyze different stocks each week and then that have been upgraded or downgraded by a major wirehouse and compare what the MarketEdge second opinion says about the stock. Can we go over a few of the reports and maybe showcase this feature to some of our newer subscribers and maybe let some of the older subscribers see how they could use this when evaluating stock selections?
Yeah, that's a good idea. Let me pull. What do we have on the site here? We have TJX, Wendy's, and Whirlpool, and we'll probably be putting some up. Usually on Tuesday afternoon, we put what we do is we try to get some stocks that are in the news that maybe have been upgraded or downgraded, and what we try to do is we write up a little report on them, and then we do our own little summary. Let's go to take a look at TJX there. Is that what you got? Yeah. Okay. Okay, so what we try to do is we see what the wirehouses are saying about a company and what they project, and then we try to compare what the MarketEdge second opinion has to say about it, and see if we can see if we're on the same page, or if the fundamentals and technicals are diverting and we're having a different thing. So what we do is we start out, we kind of give the analyst's description of the company at the very top. In this case, we have TJX. It was rated an outperform by Cowen on 11/16. And it says the company seems to be firing on all cylinders. They're cash-strapped shoppers heading into the holiday season. Their model of selling name brands at discounted prices has set the stock to a new 52-week high. That should get your attention a little bit, as the market's been a little bit rough for a while here, and this thing now is punching out new highs, which shows that a lot of the people are looking at some of these big tech companies, and they're thinking, okay, well, I've had a pullback in Google and Meta and Apple and Microsoft. I guess I need to buy those, even though they're way down here. But generally, what you want to do in buying stocks is you want to be buying the stocks that are punching out new highs. In this case, we have several retailers that are doing that, and in this case, TJX has made a couple of new highs here in the last couple of days. Now, then what we do is we say, what did Dr. MarketEdge think? And in the second paragraph, we just tell you what the second opinion has done over the near term here. In this case, we upgraded TJX to a long from a neutral on 10/28 when the stock closed at 71.91, and now we're up to 70. It closed here last week when this was written at 79, so you're up about $8, $7, and the recommendation stock is still a strong buy in here. You're punching out new highs. The 50-day moving average, if you can look at that chart, has crossed above the 200-day moving average. That's a plus. And you can see this thing, it had a breakout, and then we, with consolidation there, and then we gapped up and started to break out again here as we went into earnings. So this will just give you a little picture of the chart, and it also will, just tells you how the power rating is, whether it's bullish or if we're seeing any kind of breakdown in the stock. And then we go on down the page a little bit from here. And of course, we have all the different volume analysis and technical analysis and what's bullish and what's bearish. So you have a quick snapshot of what's looking onto that. Okay, then we go to Smart Chart. And what we try to do on here is we pull up a couple of different indicators. We usually will draw in a couple of trend lines. They didn't get drawn in last week. So what we're going to do is we're going to pop over to the chart here in just a minute, and we can take a look at that. Yeah, go ahead and put up TJX. Okay. Now, what we talked about here is what the stock has done. If we see here at TJX has been on an extended downtrend, which was in line with the broader market all throughout the year. It hit a bottom in May, as you can see over there, and then it successfully retested that bottom again, where it sold off on July 1st, 2022. You can see right there, you have a kind of a double bottom. If you're looking at this stock, if you're just pulling the chart up, that's a very bullish sign. Now, will that trend line over there on the left, going from the top, take it on down to that April high and move it up. Move it up. Well,
what do you mean move it up?
But take a different one. Start at the January high, and then draw the trend lines through that April high. It should go into the probably June area, and there you go. Now take it up to the January. That's good. It goes up into there, so that's good. So now you can see here, after we tested this bottom, we had a double bottom here in July, and we talk about that on the Smart Chart section of this. And we came down, we had a double bottom. This thing started to break back up, and we saw that the stock broke through that descending trend line, which in some cases is even a better buy signal than just crossing through a resistance at a moving average like the 100 or 200. So we had that going on with the stock, and then right after that we had the 50-day moving average start to turn up in July. We had the thing break out to a several-month high over here in August, and then we kind of popped along on here. Now I'm looking over here. We had a gap down right after that, after we hit that bottom double bottom over here. That made up for another buying opportunity. It's found support down here on its 50-day moving average, and that led the stock to run up to its highest level since February, where we consolidated. This is over here on the far right, where we consolidated for about a week and a half, and then we broke out again up to new highs from that area. Some people might draw that over here on that where is it in sort of 1st of November. They could draw that as a flag pattern, and then once on technical analysis, once you break above the flag pattern, you usually get a nice breakout. If you draw for the tops of those, the tops of the bottoms, you get a nice little channel that you can see the stock broke through. Then we also had, if you look at the indicators at the bottom, that will confirm kind of for you what we're looking at in the second opinion. As you can see, the 14-day RSI is indicated higher. It's strong. It's up here around 70. So it's actually a little bit overbought. So you may want to maybe think a little bit of pulling it back. You also had the stochastics are up here in the 90s, which also indicates that the stock is overbought. So you've had a real rocket shot here since just in November on this, and a lot of the retail stocks. So it may be one that you'd like to consider if you're looking to buy. You may want to look for a pullback on the stock where if we get a bad market day, we could see maybe the thing come down and get under, say, around 80 or something like that on the stochastics. That would be something we could look at. And then finally, going back to the doc stocks at the bottom there, we kind of give you a summary, and what we do is we give you a calendar of the technical events. And this is kind of a neat thing. When you're in the MarketEdge second opinion area, on the far right of the screen, the upper right hand corner, there's something called Technoscan, and at the bottom of the Technoscan report, and that if you don't use that, I think it's a much more detailed report than what the second opinion is. This is when you're really starting to dig in there. We give you more of what's going on. We break out the strengths and weaknesses over the short term, intermediate term, and then we go into this calendar of technical events. Now, when you're looking to buy a stock, as long as these are all bullish and stuff, you're good to go on these things. And we do that on the doc stocks too. But it's very kind of a neat little tool on here. If you're going in here to start to buy a stock, you can actually look at this calendar of technical events. And if you start to see 2 or 3 of them near the top, they're starting to turn bearish. You might hesitate just a little bit, because that means that whether the stock is extended or it's just kind of reached a near-term peak, you'll see these things. It's giving you just with little flash points that, hey, we may be getting a little bit of softness in the stock here, and it may be if you're looking to buy, kind of keep an eye on it. I think you're probably going to get a chance to buy it a little bit cheaper. And on the same aspect, if we have a void and everything has been red for quite a while, and you're thinking about, I wonder if I should sell this stock or what, and all of a sudden you start seeing a few green bullish technical events happening, that generally is a very, very good sign that this stock is probably bottomed. And if you may be doing some bottom fishing here, those little green bullish technical events on an avoid is giving you an advance notice that the stock is probably a bottom, or we're starting to see some accumulation of things. That's just a little hint, a trick on the Technoscan. And I think when you look at the MarketEdge second opinion, I would always go to the Technoscan, take a look too. That's going to give you a little deeper look at what's going on and really fill you in. Go back on the top of that Technoscan report again, Will. Okay, and there, again, this summary isn't just stocks a strong buy or stock is oversold, good entry point. This actually goes in and tells you where some support levels are, where resistance levels are, there's trend line resistance here or there, and we break it down in plain old English, so you don't have to be a real market technician to know what's going on with that. It's actually a little bit better summary than what we have on the doc stock thing. So that, again, it goes over more of the indicators. Let's just go over one more stock real quick on this, on the doc stocks.
You want to do Wendy's or Whirlpool?
Let's do Whirlpool.
Okay.
Okay, this was upgraded. Well, it was rated a market performer by Raymond James. Of course, this is the appliance maker. Their recommendation just says the production is going to be down year over year. Pricing seems to be a little bit of an issue. Shipments have been more volatile in 2022. They talk about they'd like to see 200 to 220,000 units going out. They've only done that 3 months of the year, so they have a little bit of a, they marked down their earnings to 313, and they're assuming that maybe sales will be down 4% year over year. But we'll keep it in line. Looks like the stock, if you go down here a little bit more, looks like it's bottomed out in October with most everything else, and we're starting to see some mildly improving conditions. We got a little bit of a bounce here, jumped up over the 50-day moving average, and fell short of that 200. Now we're coming down, and you can see that we're testing that 50-day moving average again on the short-term trend. That's something that you obviously want to look at. Now the power rating on this is a -1, and if you're familiar with these reports, once that power rating crosses above 0, that will be up. That helps the stock, gets one of the signals that we upgrade it to at least the neutral, which it is right now. But that would be another sign that things are starting to improve a little bit. And let's just go on down to the what Dr. MarketEdge says here. Okay, he talks a little bit about the power rating -1s, mildly improving. It's been an extended downtrend since first of the year, shows signs of bottom. Technical indicators and studies are mostly bullish, which prompted the upgrade to neutral. Lastly, it says stock holders are entitled to a 4.75% dividend, which is going to limit your downside. If you're dividends. So one thing about buying stocks with a nice dividend, that you can see when they've increased it almost every quarter, that generally will help keep stocks from going down too far. Go on down here again to the smart chart. I don't really think we needed. We did draw a line on here. What we did here, we saw this another extended downtrend from like everything in the market from January to October. And now it looks like it probably bottomed. We've got the line drawn in on the chart. The stock recently came back up above the 50-day moving average. It's come back down and tested that. We'll see if it's going to hold. Let's see. Momentum is measured by the 14-day RSI. You can see that in the top indicator, showing positive signs. It means it's up above 50. Came back down to 50. We'll see what she does here. And then the DI indicator is crossed above the negative DI indicator, which shows recent positive price action. And that's not on there, but that's something that you could take a look at as well. And we are seeing on the ADL, it's an accumulation distribution indicator, the stock is seeing some buying pressure since it put in that new low. So if you're looking to buy this stock, you're getting some early signs that the stock may be an accumulation. And if you're liking a good dividend, this might be something that you're getting on the cheap. Now, if you go into the summary, okay, here's this calendar of technical events, and ever since that thing has bottomed out, everything that's happened technically with the stock has been bullish. You can see here it's improved. It's got 9 of the last 11 events were bullish. We have relative strength turning bullish. So relative strength turning bullish means that the 50-day relative strength is above 1, which means it's outperforming the S&P 500. You always want to have a stock, outperforming the S&P when you're trying to buy it. Okay, we also had point and figure double top breakout on the 11th of November. I'm not sure. He doesn't have that in here. I'm not sure why. And then we just talk about that the stock will be considered an early entry buy if it can close above the the buy stop if you go up to the top of the page there. So you may want to look at wait till it's upgraded to an early entry buy before you would buy this. Once it's upgraded to that, that means the stock not only has a bottom, but it's also crossed above a what we consider significant resistance area, which should allow for more clean sailing. On these early entry buys, in fact, we'll go to the home page for a minute. And go up here above the tech, above this thing here, which says today's here we go, intraday breakouts. Okay, so this is a new piece that we put on there. Some of you may not know what it does. And what happens here is this is updated during the day, and a lot of these are when a stock is rated neutral actually goes above that, crosses above that early entry, that buy stop, then we're going to alert you that, okay, this stock has broken above a significant resistance area, and you want to, if you're thinking about buying it, it's time to go. It'll probably be rated a buy, get upgraded to a long shortly, but a lot of people don't want to wait a day or two before they, before when a stock breaks out. They'd like to know once that happens, and this will allow you to give you a couple ideas during the day. So if you can keep logging into the site, and you should be able to get yourself some breakout trades. Sometimes these things will, if you think you've missed the trade, you might watch it for a second. A lot of times when a stock breaks out, it may pull back with the initial buy and sell with short-term traders, and it may come back down to the breakout price and then take off again. So I would log, during the day, keep an eye on some of these things. And if you're just looking for some short-term breakout trades, this is a great place, because when these get on this list, they're breaking out right now, or they've broken out within a matter of an hour or so ago. We give you a couple ideas that you can make some money back on what's been a tough year. So anyway, just to wrap this up, we put these three doc stocks up on Tuesday afternoons, maybe after the close sometimes. And if you go in there, you can kind of look to see, okay, well, this is fundamentally, this looks good. And of course, MarketEdge loves it too. They've got we'll say it. They've got an $85 price target. Our summary on the doc stock may say that's certainly within the bounds of where the stock is headed. And we think it's a strong buy technically. And if you get a strong buy on the fundamentals and a strong buy on the technicals also, that just improves your chances of making money, and you're probably on the right track that you've got yourself a winner on your stock selection.
All right. Well, that's all we have for you this week. Remember, if you have a question you'd like to answer on the next Tuesday Tech Talk, email it to support@marketedge.com, or ask one of our live chat representatives to pass your question along to us for the next Tuesday Tech Talk. Thank you for tuning in, and we'll see you next week.